Don't let the headlines in Ottawa fool you. Ottawa's housing market is changing, but it's not crashing. Inventory is up, interest rates are holding steady, and prices, still stable, actually increasing. So if you're on the fence about buying or selling, this might actually be your window of opportunity. Let's break it down. My name's Bekkers, a local realtor here in Ottawa, and I help first-time homebuyers and upsizing families find the right homes without the stress. If you've been wondering whether to make a move this year or wait until 2026, this video is for you. Make sure to hit that like button, subscribe to the channel, drop a comment if you've got questions about your specific situation. So here's what we'll cover today in this video. What actually happened in Ottawa's real estate market in October? What's going on in both fixed and variable mortgage rates? And how inventory is shifting. And last, what I think is coming as we head into 2026. Let's dive in. We'll start with the numbers. In October, we saw 1,087 residential properties sold across Ottawa. That's down 1.2% from last October. When you compare it to 2023, sales are up over 45%. That tells us buyers are still active, but they're being a lot more selective. The average home price across all property types came in above $709,000. That's a 5% increase year over year. Detached homes averaged around $854,000, which is up 6.5%. Townhomes were seen around $556,000, which is fairly flat, and condos came in just under $438,000, which is still up slightly from month over month, still below their peak. So despite what you might hear out there, prices are not falling. They're holding steady, and in many cases, they're actually inching upward. Now let's talk inventory, because this is one of the biggest shifts in our market right now. We had over 4,200 active listings in October. It's the highest level of inventory for this time of year in more than 5 years. That's a 21% jump from last year. This means buyers finally have some breathing room. The market is now balanced. Homes are taking longer to sell. The median days on market is sitting at 26. And the average sale to list price ratio is sitting at about 97.8%. That means most homes are selling under asking, which is something we haven't seen consistently since before the pandemic. That brings us to interest rates, which are playing a huge role in shaping buyer and seller behavior right now. Let's break this into two parts, variable and fixed. Everyone talks about the Bank of Canada rate cuts, but those are only tied to the variable rates. In October, we saw another reduction in the overnight interest rate from the Bank of Canada as inflation is slowing, the economy is cooling. Many economists believe that we could see more rate cuts in early 2026. But fixed rates, those follow a completely different path and have zero tie to the Bank of Canada rate announcements. Fixed mortgage rates are tied a lot more closely to bond yields, specifically the 5-year Government of Canada bond yield. And recently, these have been trending downward as well as investors price in the likelihood of future rate cuts. That drop in yields has already started to translate into slightly lower fixed mortgage rates from some lenders. Right now, if you're shopping, you'll likely see 5-year fixed rates in the mid 4s, maybe even lower 4s, depending on the lender and your situation. Variable rates are very similar, maybe even slightly lower right now, which is why most buyers are leaning toward fixed again when they're that close. Gives you more predictability, and at the moment, typically a little bit better pricing. So what does this all mean? We are in one of the most balanced markets Ottawa has seen in years. For buyers, there's finally some power back in your corner. Take your time, negotiate conditions, avoid crazy bidding wars that we saw back in the COVID era. For sellers, the message is clear. Pricing and presentation matter more than ever. Homes are still selling, but only when they're priced and marketed right. Here's the thing I really want you to understand. When interest rates start to drop, even a little, buyer activity could surge. It's happened before. A small drop in rates can bring thousands of people back into the market. That's when competition picks up. That's when inventory shrinks, prices start to rise, sometimes faster than the rates are falling. So if you're sitting on the sidelines waiting for the perfect moment, you might miss it. However, and this is important, I'm not saying everyone should buy today. This is about timing your move based on your life, your finances, and your goals. If you're renting, planning to stay in Ottawa, if your family is growing, you need more space, or if you've been watching listings closely and wondering when to make your move, now may be the time to seriously explore your options. On the other hand, if you're someone whose budget is extremely tight, or maybe your mortgage approval depends on lower rates, waiting could be smarter. The key is not to guess, but to plan. This is where I can help. I offer a free, no pressure consultation where we walk through your goals, your numbers, and your timing. By the end of it, you'll know if it makes sense now or if 2026 is a better fit. You can book that consultation using the link in the description below. If you found this video helpful, go ahead and hit that like button, subscribe to the channel, and leave a comment. Do you think rates are going to fall early in 2026? Or do you think we'll be at this point for a while? Thanks for watching. Till next time, happy house hunting.